a revision of policy review happening, or something around the PEPP or even the asset purchase. But more on that in a little while. Very, very strong earnings from Morgan Stanley, big misses from Bank of America and Johnson & Johnson. We got Netflix after hours, and who's the other one I was looking at? What else was? Oh, and obviously claims, the claims numbers as well. So we'll go through them as we start. So usual scenario for these setups. Anything you want me to have a look at, any particular asset, please let me know. Let me just check that. So it's all working. Looks like it's working. There's a chat on. Okay, a bit of a delay, no doubt. But let's get rid of my ugly mug and let's bring up the charts instead. So this is the euro on the 1 hour chart, euro dollar on the 1 hour chart. We've come back down from yesterday's high, 114.50. With me yesterday, we rallied to this key high yesterday, 114.50. We come back down into close yesterday, moved down again this morning into this S1 support here, which sits at around the 113.85 level, and we've bounced off that in anticipation of what Miss Lagarde might say. So let's just go through it all. The PEPP, which is this pandemic emergency purchase, to click on it, show a screen. All right, I can't see your. There we go. Let's go rid of that. Which is due to expire in June 2021, so still a full year to go. They're spending 1.37 billion euros to prop up the euro area because of the pandemic issues. So there's no idea of either extending it or bringing it forward from June next year. So that's still in place. The ongoing asset purchase facility of 20 billion euros now, it's been tapered down to 20 billion euros a month. That's still in place. And again, the statement said basically the ECB will do whatever they need to do to support the European economy or the wider EU economy. And the other key impact is their long-term asset purchase facility, TLRTOs. They've been pumping into the economy, and that's still in place as well. So again, there was no talk about tweaking any of that or bringing it down to any extent. So nothing of any particular surprise. Miss Lagarde again was playing a very, very straight bat in front of the press earlier, and expect no big shakes out of that. So basically the euro has recovered from this support, this drift down. We've had a bit of a stronger dollar overnight and in the early part of the European session into S1. It's bounced off that, and we're still capped by the daily pivot point there at 114.25. So it's hovering around, literally pivoting through the euro, 114 level. No, sorry, I'm hesitating because there's nobody making any comments, which is a bit strange. So I want to check that this is actually connected and you can all see and hear me, and I'm not just talking to myself. Let's have a look. That's not. Have I started something? Have I done something wrong? We'll see. Anyway, surprising that nobody's made any comments, but everybody else said it's okay. All right, maybe just a bit of a delay. So that's the euro, that's the ECB, a bit of a non-event. Obviously, still a major impact event, potentially, but there was nothing that really surprised the market. Everything was priced in on that. So we're pivoting around 114. As you can see on this... somebody saying I can't see the chat, so that seems all right there. So anyway, I'll keep going. What was I saying? I've lost my thread now. So ECB. No, and basically this long-term. This is, I mean, it's not a long-term trend. It's only go back to the beginning of the week. But if we zoom this into the lower time, for the higher time frames, you can see a euro here been recovering for about a week and a half now, relatively strong. Broke through 113, through this top of the channel here, through here. Hang on a minute, through there. You can see that there, yeah, through there. and which is the 113.60 zone, and we're up and holding 114 at the moment. So the euro remains up on a bit on a relatively softer, weaker dollar over the last few days. So that's the euro. Let's bring it back to the intraday times. So. Excuse me. Sorry, it's just again I've got no comments in here, which is a bit strange. So euro, say on the up, and yesterday's high might be a bit of a move too far after all this news is out. Other news today, very key. Before the market opened in America, we had a big miss for the Bank of America. Profits were down 53%. Profits were also down 35% in a key pharmaceutical company, Johnson & Johnson, major pharmaceutical company. They're also talking about phase 1 tests on humans for a new pandemic vaccine, but basically Q2 earnings were down profits were down 35%. On the absolute flip side of that, Morgan Stanley's always been a very good stock trader, very good with trading stocks, and their profits rocketed a big, massive 45% for Q2. So lots of big variances in the data that's coming in at the moment, not only the economic data, but these earnings data. So we've had a strong number from Goldman Sachs yesterday, strong number from Morgan Stanley, big number, big miss from Wells Fargo, big miss from Bank of America. So the banking stocks a bit mixed, but the big players on the up really, airing and biasing to the upside. What else have we had? Right, well, the other data we've had just now, before I came in about half an hour ago, was the Philly Fed index came in better than expected. And the ongoing, or the weekly claims data out of the US, the unemployment claims data came in at 1.3 million, again, over 1 million again for about the 15th, 16th, probably, I think it's probably about something like 18th week, actually. It was worse than expected again. It was expected to come in at 1.25 million. It's worse than expectations yet again. It keeps doing that, although overall the trend is very much going down from that massive 6.6 million peak the Americans had at the end of why can't I see any comments? At the end of March. This is very frustrating. Apparently, all comments are on Facebook, so why can't I see them then? How annoying. I don't know how to do this. I might have to go to our Facebook page. Right, just bear with me a second whilst I find our Facebook comments. So I say, that's the euro still I say moving up. Yen. So that was the claim. Sorry. And the other key thing was the retail sales numbers. Retail sales data was better than expected. Came in at 7.5%, the headline number, and the core figure came in at plus 5.6%. Now again, better than expected. So overall, it's a relatively okay set of data out of the US, apart from this ongoing thing, which I've been talking about for weeks now, which is the claims data, the unemployment data. And I keep saying every week in our little video that unemployment really is one of those really sticky economic indicators, and it takes a while to recover. And, it can drag on and drag on. So here we are, weeks and weeks and weeks into this pandemic crisis in the United States. And we've got over 1 million new unemployment claims this week. This week, here we are in the middle of July. And as infections rise in the US, admittedly, hospitalizations aren't going up quite as dramatically, obviously, as the infection rate, and the death rate certainly isn't, but it's still a significant issue. Call it a peak 2 or whatever, or call it a peak at the end of wave 1. But the thing is, the situation with regard to the pandemic in the US is very much not seriously under control. And so it's rippling out and having these significant economic effects. So the openings up that came very aggressively in the early parts of the southern states in the early parts of the pandemic have had to be rolled back now. California rolled back this week. Florida's under pressure. Arizona's under pressure. So it's very, very unclear about where we move forward. And the consequence of that is really that the key six swing states, which will influence who becomes the next president of the United States. Remember, it's very unusual for a president seeking a second term not to get re-elected. So Mr. Trump was very much in the bulk seat, but at the moment, Biden is ahead in about in all 6 of those key states, and by between 8 and 11% as well. So it's quite a significant drag that the president has at the moment. So anyway, lots and lots and lots of things impacting the markets at the moment, not least of it the political situation in the US. So I'm just saying all comments in here, but I can't actually see them. Why can't I see them? Right, let me see your comments. Right, I found your comments now. Seems like there's a bit of background noise. Oh, I'm sorry about that. What can I do? I'm going. Where do I go from here? It says Tupelo. What am I going to get here? I'm new and I'm going to gain from here. Well, basically, it's just Tupelo. It's basically just an analysis of the live markets. Listen to what I've got to say. You take it on board. Don't take it on board. It's really up to you. As Kingsley was asking about the euro dollar a minute ago, we just had a look at euro dollar. As we say, it's basically it's holding up. Kingsley, it's dipped. Here this is the 1 hour chart. You can see we've been moving up most of the week. We rallied to this 1450 last week, or yesterday, I should say, and we've come down there today into this S1 level, and we bounced off that, and we're still holding on to the pivot. So the pivot point becomes key if this is going to move forward now. 112, 114, 15, and resistance is back where we were yesterday. So intraday, it's sort of ticking to the upside. On the 1 hour time frame, the 4 hour time frame has been very strong into that 114.15 yesterday. Come back down, but again supported by the key daily S1 level. And into the pivot. So again, that's airing back up to the upside now. It's over its 20-day move, 20-period moving average. Never went under it. So again, that's still tracking higher. And the daily, as we just said, continues to move up to the upside on the daily time frame. Okay, so I've found all your questions now. They're all here on Facebook. Kingsley's asking about cable. Cable here, 1 hour time frame. We had a really nice move. Well, we've had some really nice moves all week, really, on cable. We've been down, we've been up, we've been down again today. So here on this 1 hour time frame here, so we moved down here earlier in the week. We moved up yesterday to this high here at 126.40. We didn't get as high as our 126.60 earlier in the week. So again, we got lower highs. Even with all this volatility, then we moved down again today, and we found a base here so far today. Last time I looked at this, we had some support here at S1 earlier today, but we've breached a bit lower again here, halfway between S1 and S2, which sits at the massive psychological 125. So for all you cable traders, 125 is a real big psychological area for the cable, both historically and over time. It's a big round number, 125 cable pound dollar rate. So big support areas. S2 today. We bounced off that, but we're capped here as we've moved up in the last hour or two. We're capped still at 125.75. Remember, 15 minutes before the live New York session opens up. So pound coming back a bit there, but capped there, that 200 hour at 125.75. Got some more sellers in there by the looks of things. The pivot point today is up there at 125.95, just shy of 126. So, as far as trend traders are following, we were short down here. We were long up here. We went short here this morning or yesterday afternoon about 6 o'clock. And it's just closed us out now here at 3 o'clock my time here, just before I came on air. An hour before that would have closed that particular strategy out. And now we need to close back over this 20 period moving average. We're going to start to move back up, but we need these two moving averages here to cross first. We need the blue, the 5 period, the faster period to cross over at the 9 period, and then we need to close back over the 20 period as well. So nice short position completed there, and just waiting now to see what happens next. That's the cable rate for you, Kingsley. I hope that's answered your question. Lincoln, so what should we expect from this pair next week? Lincoln, what pair are you talking about? Are you talking about the euro or the pound? Please update me, because I'm sorry, I've just got your message. I know it was about 10 or so minutes ago, but I've just got your message. Kim, we've just done the euro, so I hope I've answered your question on there. It is still a buy. I guess you're talking about the euro. Yeah, euro on the higher time frames, Kingsley. Thenundu. Was it Thenundu? Oh, it's Lincoln was asking about it. Is still moving to the upside. Ahmed's asking about the Dixie, the dollar index. Again, another one that's been plunging over the last few weeks, days. So here the dollar index moving down. This is the 1 hour time frame. This is today, Thursday, so Wednesday, Tuesday, Monday, Friday. We're all the way up here, having another go at 97. We slipped under 96 yesterday. We went as low as 95.75 here on the dollar index yesterday. Found some support, and then this is the recovery that we've had into the close yesterday. And Ahmed, and the rally today. So we've rallied up. Dollar's got a bit of a bid. We've ran to 96.20. In fact, we ran above that. In fact, 96.30 area or 96.25 before we've moved back down again. So still holding the bid. But again, if you've been trading this on this 1 hour strategy, it's one to potentially trade on with this strategy. But again, it's went long and it just closed you out again in this last hour. Not necessarily for a huge gain, but it's sort of airing to the upside. See how the Bollinger Bands have moved down. We've turned around a bit. We're quite narrow. We've had a bit of a pinch. We moved up, a bit of volatility, bigger candles than we'd had in the typically in the overnight Asian session. Some bigger candles in the European session, as you might expect, because obviously it was all ECB day. And remember, this index, it's a weighted index. It gives you the averages for the dollar index, but there's only 6 currencies within it, so it's very narrow. And the euro, it has a bigger weight than any other currencies that are in there. It includes currencies like the Swedish crowns in there as well. So it does give you a spread of how the dollar's doing. But it's not ideal, to be honest. But anyway, it's as good as many we get. So dollar index airing up, but still testing this 96 low. And if we take this up to these higher time frames, you can see, we zoom in, we can see how relatively weak the dollar index is. This is the weekly time frames. Obviously, this is a massive volatility we had in March and into April. But as you can see, the dollar's basically been weakening since this consolidation we had in April and May. We had a big sell-off down to June into this, just testing 96 for the first time, and then again here a month later, 90. Here we are, beginning middle of July. We've gone weaker again under 96. So again, the trade. This is the weekly time frame. Obviously, this week isn't complete. But we had a very significant week last week, so this first week of July. So we've moved down to test under 96, but clearly looks like there may be some support here, but a key pivot area here on this weekly time frame down at this 96 level. So bias is to the downside still in the higher time frames, the daily and the weekly. And I say on this 1 hour time frame, we've sort of ticked up a bit today, but generally it's sort of moving down. Ahmed, I hope that's answered your question. Tupelo, I hope you're still here. I hope you're getting something from this. If not, let me know. Please contact me, because the problem, and see here on your profile, you're a teacher, so the problem's always with the teacher, never with the pupil, guys. So always bear that in mind, and please ask questions. Clarence saying there's a bit of background noise. I'm a bit disappointed about that. Calvin, please take your spam away. Please take your spam away. Hazam as well. Is that it? Is that all the questions I'm getting today? Oh, dear me. Let's have a look. Looks like it. Or is it the background noise is not good? I don't know. I can't see. Let's see if there's any more questions coming in. Hang on a minute. I've actually got a question here. Perhaps this is comments from this Facebook comment. So, Jim is asking me about the yen, buy or sell. Well, again, my friend, as I say every time, it depends on your time frame, doesn't it? A 1 minute trader might be buying, a 15-minute trader might be selling, a 1 hour trader might be buying, a 4 hour trader might be buying, but a daily trader might be selling. It's all about your time frames. But let's have a look at the yen. Let's go through them, shall we? Sorry, it sounds flippant, but let's go through them. So this is the 1 hour time frame, Jim, my friend. So we've been down, big shakeout yesterday, and again, whatever strategy you use, use it, test it, see how it goes, see how it works for you. This crossing EMA strategy based on a moving average, so it's really wanting trending. It's not very good when markets are going sideways, when the moving averages are flat. That takes you in and out. That's no good. What you do want is trends. So you want things moving down or up or down, like we had yesterday. So big trigger yesterday here on the 1 hour time frame on dollar yen. We moved down under the 200 hour here at 107.25. We had a trigger here early yesterday at 107.15, and we ran all the way down, bounced. Huge move there. That was I don't know how many pips that moved down. Moved down to 106.50 from 107.20. So a huge, big old move intraday for the dollar yen there. Massive. When the ATR is only about 9 pips, that's a fair old move on the 1 hour time frame. That's a fair old move there for the yen. Closed out if you're using it in the 9 period to get out there. Went long this morning. Again, if you've taken every single one that comes, went that long there. It didn't happen. Your stop loss would have been back there. Actually, you didn't know you've still been in there, because that would have taken you long. Ideally, the rule says you need to have your stop loss under the turn in the market, which would have been down here. You could have easily, comfortably used that candle there. It's way candles back, and it's the last big one, so you could have even been more concerned with half of the, not all the way down here, half of the previous one. So anyway, your stop loss needed to be down here, so you would have actually stayed in that, even with that shakeout there, and you're still long this one. So you're still long dollar yen here on this 1 hour time frame. But we have run through pivot point one, and we've also stalled at the 200 hour today. So you may have, don't get greedy. Or again, the rules are with this strategy, trade it, multiple of the ATR on the time frame. ATR, as I say here, was 8.7 pips. So we've already ran 20 odd. So we've already run 2 and a bit of the ATR here, Jim. So it's a fair old gain so far as we've ran to the 200 hour. Or, you stay in it until it turns around and closes back through this yellow line. So if you're doing that, the 9 period EMA, you're still long, it's still trending higher. 4-5 hours now, can't get over the 200 hour. So it's looking pretty strong at the moment, but we'll see how it closes. And R1 sits there at 107.26. So if you're not out yet, it's up to you. Obviously, depending on how you're trading it. But 1 hour, that remains long. 4 hour just went, having gone short here and not run down. This is triggered long here on that with this strategy here just at 4 o'clock, just half an hour ago. But again, bear that in, although that's triggered long, remember the down trend is still very much in play. These highs are getting lower, the lows are getting lower, so you're very much against the higher time. You're going against the trend, so be aware of that. So again, if you're a 4 hour trader, you've probably already got that little trend line on there. So, maybe looking to take shorts as this gets to R1 here, or even 200 period moving average up through there. Who knows? But there's certainly some, again, you'd see a support level through there, 106.75. So a falling triangle there, flat bottom triangle there, 106.75 here for 4 hour traders. Daily time frame, a bit messy, isn't it? Because we're looking at the 1 hour time frame on this one. But again, you can see that 4 hour trend line we put in, it's still consistent with this daily trend that's continuing down. So that's our higher time frame down trend line here from these highs at the beginning of June, and we're still, haven't broken over that. So it's still airing bias to the downside, the daily time frame. The low here at the end of June was significantly low. Remember, we went all the way down here to 106 here on dollar yen. So that one's airing to the time frame. Jim, I don't know what time frames you're trading, but they're the ones we looked at. 1 hour, shorter time frames, maybe a bit more volatile. Let's have a look. Any more questions? Can I see the questions again once? Don't know. Right, some more comments coming here through on Facebook. Clarence, I hope the background noise is gone. You're saying you may have disappeared. Kingsley's asking about euro pound. Well, it's had a quite a volatile session for euro, or sessions for euro pound. We've been playing with 90 for euro pound. We're on as high as 91 earlier in the week. So still airing to the upside here. This is the 1 hour time frame. Kingsley for euro pound. Again, another one that's drifted down. Nice trend there. Down. Looks like it was turning around. It certainly did. That was as far as today's concerned, the 1 hour time frame. So we've been short from here. Is it a good example? Again, I'm saying that this particular strategy, there's lots of other strategies. That would have taken you short there. You've moved down. We moved back over to, it might have gone out there. You could have gone back in there. It's gone back down. That would have taken you out there for a small. Would you have gone short again there, taken you out again there? So very choppy. So those would have cancelled each other out. A few pips lost on that one. But then into the close, it was relatively ticking up. So if you caught that one earlier this morning, here at 4 o'clock, I was certainly fast asleep. But there we go. That's moved up this morning and then petered out with a bit of resistance here at 96. Really, there's two fractal highs on this 1 hour time frame, rolling out, and now it's looking to perhaps give up the ghost a bit. But it's had a nice old move over the pivot point, over R1, halfway to R2. Two fractal highs suggesting we might be running out of steam earlier, and indeed this looks like what's happened. Consequently, nobody's wicks to the upside, small candles, not much emphasis on that move up. So it seems to have rolled over and moving down again. Right, some lots more questions coming in here, so I can't see them all now. So I apologise for missing those before. So Kingsley, that's relatively bid still. It's still above its 20-day, looking to move down in the 1 hour. The 4 hour remains bid over its 20-period moving average, over its 200-day moving average, over 90 here for the 200 period, over 90, the round number, and moving up into R1 today, 4 hour, and earlier this week, I say we spiked here over 91, so 4 hour remains bid, and the daily also having had a rally up here all the way to 91.75 at the end of June. We've had a weak start to July, and then it turned around quite significantly there on Friday, on the 13th, on Monday. Big support at 89.60 and followed through for the rest of the week. So daily traders also on to the upside. Christian, euro, yen. So see if I can actually, I can't see any of these questions for some reason. It's not on Facebook. All right. Yen saying thank you. Michael's saying pound on YouTube. So I can't see. I've got YouTube and Facebook live here, but I can't see all your questions together. But never mind, I keep talking between you two. So Christian, 6 minutes ago, asked about euro yen. So euro yen again. I don't know if you're an intraday trader or where have I got it. Here we are. Intraday trader today, sort of bit sideways here on the 1 hour time frame. We've clearly got a bit of a lid on the top there, 122.50, just above R1 here from yesterday's high. So we've been moving up quite nicely ahead of the ECB. You know, it quite often happens this, anticipation of what might come, and then we've dipped down, but we're rolling back up there. The market could argue Mrs. Lagarde didn't disappoint, the ECB didn't disappoint. But the thing about euro, and I didn't mention it, Kingsley and other, when we were talking about the euro dollar as well, is obviously the big event. Following this was really what was anticipated, what's come out of today from the ECB. There was a bit of talk. I was hoping there might have been some talk about a revision of this obsession with this 2% inflation target, and some talk about the review of policies and strategies under Miss Lagarde, but it was none of that today. So they're managing this monetary policy with their PEP and their APP and the long-term LTROs. But it's the government now. Tomorrow they meet, Friday and Saturday, to try and thrash out this €750 billion pandemic relief fund. And the four key countries that objected to it weeks ago, once the Germans and the French had first mooted this number, the French, not the French, what I'm talking about, the Dutch, the Swedes, the Danes, and the Austrians are still very much against it. There's other East European countries that are not too keen on it, but they can be persuaded. So it looks like it's going to be a tough negotiating session. Mrs. Merkel has also already laid the ground rules that she's not too optimistic about getting a deal, but history of the EU shows that they eventually do get there. So I'm erring on the upside that they may come up with some sort of deal. The issue is whether this €750 billion fund is more biased towards grants, i.e. giving money away, or loans where countries and institutions and businesses need to repay them back. So that's the big thing. So that's what Mrs. Lagarde, no doubt, has said. I missed a lot of her press conference today, but no doubt she was mentioning that at her press conference as well. So that's impacting the euro. So what the market is telling us that the euro is still on this bid. So here, even against the stronger yen in these pandemic times, the euro is still bid up here. This is intraday stuff. So it's getting back to where we were, euro yen here, to where we were yesterday, testing R1. If we take this to the daily time frame, you can see the big rally it had before, yen got stronger, and now euro's ticked over the last couple of weeks in anticipation of this meeting coming, basically. So, economies opening up, and the Japanese yen safe haven bid sort of slipping a tad, but we still have this air bias to the upside. So here on the daily time frame, euro yen, Christian, it's still holding up. The 4 hour is also holding up over this 20 period, over the pivot point, running to the R1, and same with the H1, the 1 hour time frame. So again, R1 needs to breach if it's going to test 122.45, which is the high from yesterday, and a significant weekly high, as you can see here. 1, 2, 3, 4, 5, 6 week high. Where we are at the moment at 122.45 for euro yen traders. Christian, I hope that answered your story. Louise, hello, sir. Long time no speak. You're asking, is gold still going to test 1752? Well, that's an interesting comment, my friend. 1752. That's a long way from where we are at the moment, my friend. Gold 4 hour and daily, please. So let's have a look at the gold market. So gold for me remains very bid, Louise, my friend. 1752 is off my chart here, off this 1 hour chart. Let's go to the one at 4 hour time frame. So 1752 you talked about. 1752, all the way down here. Interesting way you mentioned 1750. Why have you mentioned 1752? It's the 200 period 4 hour moving average, which is a key area. So that's a definite line in the sand, my friend, but it's a long way from it, isn't it, at the moment? 4 hour chart for gold is consolidating at highs. As I said yesterday, someone was asking me about gold on the 4 hour yesterday, Louise, and it's very much consolidating at highs above this support now, which sits at 1796, 1795, that channel there, and the top, which we've put in earlier last week, at 1870. So that's the channel we're in, and we're oscillating between those two tops now. The reason we picked this 1796 level is it's the top of that last 4 hour candle. That's a big 4 hour candle as we were breaking out of the previous channel that took us above the 1789 level, which had been the previous daily high. So it's going up in steps, and it's holding up in steps as well. So we're still holding this 7. So for the floor is S2 today here at 1796 for 4 hour trades, Louise, and the top of the channel sits just above the daily R1 at 1817, and we're oscillating between the two on that 4 hour time frame. We got to the daily time frame again. It still just looks bid, basically. We broke over the 20-day moving average as we broke out. I'm sure you've heard all this before, but we've had this conversation before, Louise, haven't we? Back at the beginning of June, as we broke over the key 1725, and then we broke through the channel towards the end of June of the channel we were monitoring at the time then, which was 1745. We gapped through it here over the weekend of 19 and 22 of June, and then we just rallied from the 22nd of June as we've broken out with that channel at 1745, and it's just trended higher through the big psychological 1800 level last week. And I say we pitched to new 8-year highs here at 1817 on the daily. So the daily remains big. The 4-hour is very much in a channel, Louise, moving sideways. There's a bit of that going on the daily as well, but it's still, the daily hasn't closed even under this fast-moving 5-period EMA. Look at this. This is the blue 5-period even moving EMA. We haven't closed under the 5-period EMA since here, the middle of June. So that's over a month, or nearly a month now. 18th of June to the 16th of July. It's a strong gold move, my friend. So that's very much trending to the upside. Java says sell. I don't know what we say. Oh, Java says to Saroni Kim sell. So what was Saroni Kim asking about? Let's have a look. Saroni Kim was asking about. I can't see. Don't know what we're talking about, my friend. Javas is also saying to Kingsley to sell harder. Again, I can't remember which pair you were talking about, my friend. Which time frame is this? Michael says. Well, you ask what time frame you want to look at, Michael. I normally default. These charts are normally defaulted to the 1-hour time frame intraday, but I take it up to the daily, and we have a look at the 4 hours as well. Anything other than that, please, you ask, my friend. That's what I'm here for. Daily. Somebody was watching what I was talking about. Okay, let me just go back to the stream because we've got some questions coming in on YouTube, online YouTube as well. Michael is asking about cable. Michael Price is asking about cable. So cable, as we said earlier, Michael, I don't know if you were here, has been a very good trader intraday on these 1-hour time frames. Excuse me. Moving up earlier in the week, moving down yesterday and today, and into this floor here, still above the key psychological 125. Huge, as I say many times, 125 on the cable rate is just one of those rates. It's historically a big number, and you tend to get clusters of either buyers or sellers down at these levels, which is what we sort of had yesterday as we went under. See here on this 1-hour time frame, we trended down nicely. Thank you very much. Under 125, big volatile hour, huge wick all the way down there, bounced off the 125, and then we moved up and triggered long here on this 1-hour time frame yesterday. As this 6-hour 1800 candle closed, it trended higher, closed under the 9-period EMA for the first time here late yesterday, and then went short, completed a short 2 hours later. So that closed out our long, went short then, it's gone down there, closed the short just earlier today at 1500 server time, and now it's looking to go long. We still got strong candle there, current strong candle. But the candle isn't closed. We've still got 20 minutes of the hour to go. So if you're trading this on the hour time frame, don't jump in yet. It may not close like this, although it's looking very positive. It's over its 200-hour moving average. It's had a strong hour up and 4 consecutive hours up so far by the looks of things. So that's looking to go long. But again, we're still under 126 and we're under the pivot point. But if this holds over this 200-hour moving average here, we're likely to attempt the pivot point at 125.95, and that may even take us to another attempt at 126 later today, but we'll see. Remember, lots and lots of data today. We've had all this key US data in already. The weekly claims continue to decline, but they're still worse than expectations. The 4 weekly average for the unemployment claims still remains at 1.3 million, a huge number in historical terms. The Philly Fed index was better than expected. The retail sales data was better than expected, 7.5%, and the core number, the key, more important core number, was also positive for the American economy at 5.6%. And I say the big sticky point for me has been and will remain both the earnings numbers every time we come out with these NFP numbers every month and the weekly unemployment numbers, which remain robustly over 1 million new claims every month for the last, I think it must be like 18 or 19 weeks now. It's a hideous number. And having an significant impact on the US economy. Earlier we had these earnings from the Bank of America, which missed. Profits were down 52%. Profits from Johnson & Johnson, the big pharmaceutical company, were down 35%. But on the flip side, we had a massive beat by Morgan Stanley, following in the footsteps of the big beat yesterday for Goldman Sachs. So Morgan Stanley beat expectations and profits were up 45% for quarter two. So big beat on that side, along with, Citibank earlier in the week and Morgan Stanley and Goldman Sachs yesterday as well. So there we go. So cable, my friend Michael, seems to be ticking up here on the 1 hour time frame. If we go up to the 4 hour time frame, it's sort of looping down a bit. It looks like it may be turning around, but the last move was the short position here from this 126.35 high. So you can see the highs are getting lower down the 4 hour time frame. The lows were getting lower, but supported, interestingly, by the 200 hours. So they've got a bit of support here on the 4 hour, although the lows are coming down. So looking to break out of this channel on the 4 hour time frame. The daily time frame, again, continuing to the upsides, holding up over the 200 hour moving average, which sits here, 200 day moving average, which is flat. So we're running out of a trend now. At 125. So 125, as I've just said about how psychologically important it is, it becomes a key again as we move forward here the last week or so for cable traders. With the resistance on the daily time frame up here at the 200 period moving average and R2 today, which is at 127. So big 200 pip zone there for cable on the end of day trades there, Michael. So I hope that's answered your question. If that's the time frame you want, if you're looking at short time frames, please let me know. Any more questions here? They're sort of coming bits and bobs. Mohammed, cable. Mohammed, well, I've just looked at Mohammed. I just looked at cable there. Any particular time frame, Mohammed? You've just put pound cable. Any particular time frame here? We'd say we've got the daily time frame, that 200 pip gap between 127 and 125. But there into the upside over its 20-day moving average, over its 9-day moving average, and now back over its 5-day moving average. So it's sort of biasing to the upside cable on these high time frames. 4 hour, we just said again, sort of bit more choppy, but supported by the 200 period here at S1, and trying to move back up, having had a move down earlier in the week. Cable and the 1 hour very nicely trending and trading this week, down significantly, up quite significantly, and then down quite significantly as well. Now we're moving back up, and that's looking to move long again here on this 1 hour time frame. On the cable rate there, my friend Mohammed. So any more questions, anybody? It seems to be drying up. Pandy, looks so confusing. Well, what Pandy, my friend? Tell me what looks so confusing, and what market are you talking about? The thing with trading, guys, is to one person's confusion might is somebody else's clarity or simplicity. So you got to trade something that fits your mindset, fits your psychology, and fits your personality. There's no point in trying to trade 5-minute charts or 2-minute charts if you can't swap and change your mind around very, very quickly. Short-term time framing takes a lot of concentration. Even if you're using a robot, as I said in the webinar earlier this week, or you're following an EA, it still can be very tiring. The downside of obviously the higher time frame trends is, if you've got a system, you get less trades, you get less potential opportunities, your stop loss and your targets tend to be bigger, so you get risk overnight because you've got positions holding overnight. There's pros and cons to any type of trading, any type of asset that you're trading. But as you can see here with the 1 hour chart here on cable, for instance, You know, there are opportunities on everything. This happens to be the cable rate. It could be very easily just something completely different. I don't know, let's bring in silver, for instance. So, well, it's not, silver's not playing. Aussie yen, again, you know, it happens to be a Forex pair, but, you know, it's trending up, trending down, trending up, then sideways and trend down. So whatever asset you're trading, you know, just have a system, trade your system, you know, have a stop loss, have a take profit, accept your losing trades, because you do lose a lot in this business, and lots of people just can't accept that. It's just part of the business, but you keep the losses small. That's the trick. You know, you speak to any successful trader of any length of trading, you know, they keep their losing trades small, and they let their winning trades run. Sounds quite easy to say, and it is easy to say, quite often very difficult to implement, which is why I always say this business is, you know, 90% a psychological business. Not listening to guys like me talking about charts and candlesticks and stop losses and moving averages. It's really about you understanding yourself and accepting, you know, your losing trades and just bagging your winning trades, basically. But again, it doesn't really matter what the asset. This happens to be the Apple chart, the mighty Apple on a daily time frame. So that looks nice and easy, doesn't it? A very, very strong trend in there. So just stay with it, you know, adding to the trend on the dips, which is what lots and lots of traders have been doing as this continues to go up. It's not going to go up like this forever. Nothing ever does. But at the moment, it still is. Simple as that. So have some rules about when you get in, have some rules about when you get out, and follow them, implement them. Again, that's what a lot of traders get wrong, can't do, or won't, or find very, very difficult to do. So anyway, any more questions, guys? I'm going to wrap it up. My voice is going. Let's have a look, see if there's any more questions today. Pandy, I don't know if you're still here, but you're saying it looks so confusing. It doesn't have to be confusing. If it looks confusing for you, use something else. Use something that makes sense for you, whether that's just price action trading, whether it's, you know, no indicators at all, or whatever it is that works for you. That's the key thing. But you have to, again, understand the basics of trading, whether you're trading Forex, commodities, indexes, whatever it is. Understand the leverage on your account, understand the margin on your account, understand lot size, and make sure you understand all those basics. Have a look at our website. There's loads and loads of education videos on there if you're just getting started, or even if you've been trading for a while and you're looking for a new, perhaps a new start or a new impetus to get you going again. But it really is all about you, as I say all the time. So thank you for your time, everybody. We'll see you all again next week. Trade carefully, and as ever, may the pips be with you. And we shall just take Michael away. And I say, as ever, take care. All the best.